Today is Wednesday, July 13, 2022. Let us take a look at today's crypto headlines. Record-breaking 9.1% inflation surge. Bitcoin not a currency? South Africa to regulate crypto as financial asset. Ethereum price risks bear flag breakdown, 20% drop against Bitcoin. Binance burns $444 million in BNB tokens. Bitcoin wipes $15 billion from market cap in 10 minutes as US inflation data runs hot. FSB labels crypto as an unreliable store of value needing robust regulation. Please like, subscribe and turn on the notification button to keep supporting our channel. Record-breaking 9.1% inflation surge. Inflation surged in June, with US consumer prices jumping by 9.1% year-over-year, according to fresh data released Wednesday by the Bureau of Labor Statistics. That's up from the previous reading, when prices rose by 8.6% for the year ended in May, and much higher than the 8.8% that economists had predicted, according to Refinitiv. The Consumer Price Index for June also showed that overall prices that consumers pay for a variety of goods and services rose by 1.3% from May to June. Much of the June increase was driven by a jump in gasoline prices. Americans faced record-high gas prices last month, with the national average topping $5 a gallon across the country. Bitcoin not a currency? South Africa to regulate crypto as financial asset. South Africa's Reserve Bank will regulate cryptocurrencies as financial assets, and new laws are expected over the next 12 months. The South African Reserve Bank is set to introduce regulations next year that will see cryptocurrencies classed and treated as financial assets to balance investor protection and innovation. Cryptocurrency use in South Africa is in a healthy space, with around 13% of the population estimated to own some form of cryptocurrency, according to research from global exchange Luno. With more than 6 million people in the country having cryptocurrency exposure, regulation of the space has long been a talking point. Companies or individuals looking to provide advice or intermediary services involving cryptocurrencies are currently required to be recognized as financial services providers. This involves meeting a number of checkboxes to comply with global guidelines set out by the Financial Action Task Force. South Africa's National Treasury Budget Review published in February 2022 formally introduced the move to declare cryptocurrencies as financial products. The state also plans to enhance the monitoring and reporting of cryptocurrency transactions to comply with exchange regulations in the country. South African Reserve Bank Deputy Governor Kuben Cheti has now confirmed that new legislation will be introduced in the next 12 months. Speaking in an online series hosted by local investment firm PSG on Tuesday. This will see cryptocurrencies fall under the scope of the Financial Intelligence Center Act, FICA. This is significant, as it will allow the sector to be monitored for money laundering, tax evasion and terrorism financing, which has been a heavily debated byproduct of the decentralized nature of cryptocurrencies and blockchains. Cheti highlighted the road that the SARB will take over the next 12 months to introduce this new regulatory environment. Firstly, it will declare cryptocurrencies as a financial product, which allows their listing as a schedule under the Financial Intelligence Center Act. Following that, a regulatory framework will be developed for exchanges which will include certain Know Your Customer (KYC) requirements as well as the need to meet tax and exchange control laws. Exchanges will also be expected to issue a health warning to highlight the risk of losing money. Chetty noted that the SARB's attitude toward the sector has changed significantly over the past decade. Some 5 years ago the institution thought there was no need for any regulatory oversight, but a gradual shift in perception to define cryptocurrencies as financial assets has changed that stance. By all definitions, it's cryptocurrencies, not a currency, it's an asset. It's something that is tradable, it's something that is created. Some have backing, others do not. Some may have a genuine underpinning, real economic activity. The deputy governor insisted that the SARB did not regard cryptocurrencies as a form of currency, given the perceived inability for everyday retail use and the associated volatility. Chetty agreed that continued interest in the space creates a need to regulate the sector and facilitate its merge with mainstream finance in a way that balances the excitement and hype with the investor protection required. The SARB also continues to explore the possible introduction of a central bank digital currency, CBDC, having recently completed a technical proof of concept in April 2022. The second stage of Project Coca involved using a blockchain-based system for clearing, trading and settlement. With a handful of banks that form part of the Intergovernmental FinTech Working Group, IFWG. Ethereum price risks bear flag breakdown, 20% drop against Bitcoin. Ethereum funds have been undergoing a modest recovery after witnessing 11 weeks of continuous outflows. Ethereum's native token, Ether, ETH, is down nearly 40% against Bitcoin, BTC, since December 2021. But, even more pain is possible for the ETH/BTC pair in the coming weeks, based on a classic technical indicator. Ethereum price risks technical breakdown. The ETH/BTC chart has been forming a bear flag since early June 2022 on the 3-day timeframe. In detail, bear flags are considered bearish continuation patterns that form as the price consolidates higher inside a range defined by two ascending parallel trend lines after a sharp decline. They resolve after the price breaks below the lower trend line, i.e., in the direction of its previous downtrend. As a rule of technical analysis, a bear flag's downside target comes to be at a length equal to the size of the previous downside move. Lately, ETH/BTC has been eyeing a similar breakdown, with its profit target sitting around 0.0439, down almost 20% from the price on July 13. Nonetheless, bear flags have an average success rate of around 67% when it comes to meeting its profit targets, according to Samurai Trading Academy study. Additionally, veteran analyst Tom Bolkowski sees the bear flag meeting its target only 46 times out of 100 attempts. Looks like actual death. A separate technical setup shared by analyst Pentoshi shows Ether facing the possibility of falling much lower than the bear flag's profit target. Pentoshi suggests that ETH/BTC could dip toward an ascending trend line that has been serving as its support since September 2019. The level comes near 0.036, down 30% from the price on July 13. Ethereum funds witness modest inflows. The bearish setups for ETH/BTC appear in contrast with a potential recovery across Ether-based investment funds. This improvement in sentiment is maybe due to the increasing probability of the merge, where Ethereum moves from proof of work to proof of stake, happening later this year. Binance burns $444 million in BNB tokens. BNB chain has burned 1,959,595.29 BNB tokens worth around $444 million in its latest auto burn event. BNB chain has completed its latest quarterly auto burn token event, taking roughly $444 million worth of BNB out of circulation. Binance burns $444 million worth of BNB. BNB chain has completed its latest auto burn event, significantly reducing BNB's circulating supply. Binance's blockchain burned 1,959,595.29 BNB tokens worth more than $444 million Wednesday. The total sum burned accounts for 1.2% of the circulating supply. Binance has burned more than 38,683,447 BNB to date, making significant strides to achieve its long-term goal of reducing the total BNB supply by 50%. Today's burn event is BNB chain's 20th since the program was launched in late 2017. It's also the third quarterly auto burn, meaning the number of tokens burned was calculated based on the price of BNB and the number of blocks produced by the BNB chain during the last quarter. BNB chain also continues to burn a portion of BNB chain's gas fees in real time. Despite the latest development, BNB has shed 4.5% of its market value over the past few hours. The token appears to have broken out of an ascending triangle that developed on its 4-hour chart, and the bearish continuation pattern suggests that BNB is bound for further losses. The height of the triangle's y-axis added downward from the breakout point anticipates an almost 24% correction for BNB. Further selling pressure could validate the bearish formation, potentially pushing its price to the $175 level. BNB would likely need to reclaim $235 as support for a chance of invalidating the pessimistic outlook. If it succeeds, the next critical area of resistance to pay attention to would be around $247. Printing a 4-hour candlestick close above this level could signal a bullish breakout toward $30. Bitcoin wipes $15 billion from market cap in 10 minutes as US inflation data runs hot. On July 12, the price of Bitcoin, BTC, stabilized into a steady holding pattern ahead of the release of US inflation data, which ultimately injected further downwards volatility. Indeed, news that inflation in the United States exceeded 9.1%, the highest level since November 1981. According to the new CPI report for June, only caused a further downward trend in Bitcoin and the cryptocurrency market. Currently, Bitcoin is trading at $19,180, down 3.45% on the day and a further 4.70% in the last week, with a total market worth of $366 billion, according to CoinMarketCap data. Notably, the flagship digital asset lost $15 billion from its market capitalization in the space of around 10 minutes. As it fell from $379.91 billion to $364.55 billion upon news emerged with the negative CPI report for June. Tension was in the air for the CPI report. As the time counted down to the release of the inflation statistics, investors drew a collective deep breath, and the global markets remained tranquil. But as many prominent crypto trading analysts had hinted at the start of the week, an announcement, positive or negative, would be said to impact the digital assets price significantly. The data on inflation, which came in far higher than anticipated, will put even more pressure on the Federal Reserve of the United States to raise interest rates. Bitcoin, along with other risk assets, has suffered a significant loss of value this year, falling by about 72%, since it has failed so far to serve as an inflation hedge. Bitcoin, which has always existed in an environment with low interest rates, has been hammered by the Fed's monetary policy, along with other risk assets. Strong employment data that was released last week sent a signal that the Federal Reserve would be able to pull off a soft landing, thereby averting a recession despite substantially increasing interest rates. This was the case despite the fact that interest rates have been rising rapidly. Meanwhile, after reaching a low of $17,600 in June, the general view among investors was that Bitcoin would still be anticipated to see another sell-off in the near future. FSB labels crypto as an unreliable store of value needing robust regulation. Although the cryptocurrency sector is expanding and digital assets like Bitcoin, BTC, are becoming more accepted, some financial regulators are distrustful and are seeking ways to impose more control over them, especially in light of the crisis they have endured recently. Specifically, the Financial Stability Board, FSB, the international body that monitors and makes recommendations about the global financial system, has called the novel asset class an unreliable store of value in need of robust regulation. According to the regulator's letter to the G20 finance ministers and central bank governors dated on July 11, the letter issued a warning about the global financial system's pre-existing vulnerabilities illuminated by the increasing inflation, decreased growth, and tighter global financial conditions, as well as that these circumstances could cause further problems. In the part of the letter that covers cryptocurrencies, the FSB stated that the sharp fall in market values has, once again, shown that crypto assets are heavily exposed to swings in market confidence, which makes them an unreliable store of value. Underscoring the need for strong regulation. According to the letter, the recent crisis in the crypto market highlights the importance of advancing the ongoing work to address the risks posed by crypto assets, and brings into sharp focus their intrinsic volatility, structural vulnerabilities, and the issue of their increasing interconnectedness with the traditional financial system. In order to prevent the potential major financial damage and loss of market confidence caused by the spillover from a single crypto market player's failure, the FSB is working to ensure that crypto assets are subject to robust regulation and supervision and will continue to coordinate regulatory initiatives in this area. We are also analyzing the financial stability implications of decentralized finance. FSB was working on unveiling global crypto regulations by October 2022, referring to the planned regulations as robust. In response to the recent crypto sector turmoil that saw most investors suffering heavy losses, the most recent letter is an update to this work. Don't forget to like, subscribe and turn on the notification button so that you won't miss any updates.